what time frame to use when day trading is an important choice, and the right time frame will vary by each person, the strategy they use, and how they like to spend their trading time, meaning a more relaxed trading session versus more intense one. In this video, we will talk about a simple concept to choose the right time frame for day trading in order to make the right decision right from the beginning. Professional traders spend little time choosing a time frame. Their choice of time frame is not based on their trading strategy or the market in which they are trading. It is based on their own trading personality. Before we begin, here is a chart that shows the difference between 1 minute, 5 minute and 15-minute chart. They all show 12 hours of price data on the same day. But as you notice, there is a significant difference in detail. So let's talk about the benefits and drawbacks of each trading time frame so you can decide which one is right for you. A 1 minute time frame may work well for someone who likes seeing detail in the price movements and potentially getting in and out for short term trades that only last a few minutes. Trading the 1 minute require nearly constant attention while trading. Since candles are generated every minute and trade single can occur often, depending on your trading strategy, of course. Because price bar occur frequently, 1 minute chart trader typically have the opportunity to take more trades per day compared to other time frames. With a winning system, more trades means more profit and a faster compounding of the account. But with the potential for more activity, a trader who does not have a good risk management strategy can diminish their capital rapidly. On a 1 minute time frame, it is possible to make several trades within a 2-hour trading session, and it is perfect if you don't want to spend too many hours in front of your screen. With trades based on smaller candles, stop losses and profit targets tend to be smaller than those used by higher time frame traders. This does not have to be the case, though a trader could use a small stop loss on the 1 minute chart and aim for large reward ratio risk trade. The main takeaway is that the 1 minute time frame is for people who want to maximize their trading time with more trades, typically with slightly increased position sizes using small stop losses and profit targets. A 5 minute chart may work well for someone who focuses on bigger intraday trends and does not need to see the open, high, low, close price every minute, but would rather get data over 5-minute periods. Trading the 5 minute requires focus but less constant attention than the 1 minute chart because candles are forming every 5 minutes, so there is more time between data points. If you wait for candle to close before acting, this means no action is taken for at least 5-minute interval and often longer. Thus, 5-minute chart traders tend to trade less than 1 minute chart trader because there are fewer candles to act on. Depending on your strategy, 1 or 2 trade may develop in a 2-hour trading session, possibly more but less than on the 1 minute time frame. Stop losses and profit targets tend to be larger than on the 1 minute chart. This is not good or bad, but it does typically mean fewer trades per day. because candle and price swing are bigger on the 5-minute chart. This means a greater distance between the chosen entry and exit. So, the main takeaway is that the 5-minute chart is for people who want to focus on larger intraday movements, receiving fewer signals with moderate position sizes. A 15-minute time frame is for someone who wants to see the major trends and movements throughout the trading day. Trading on 15-minute chart requires less constant focus because candles are occurring over a longer period. If you wait for candle to close, then there is at least a 15-minute period between possible actions. Traders on this time frame may only be taking one or two trades per day, but if you are only trading during a 2-hour session, many days may have no trade signals. So trading this time frame may require more time in front of the screen since it takes longer to get into and out of the trades. Stop losses and profit targets tend to be larger than on the 5-minute chart, so this means fewer trades per day. Position size are usually smaller than those on a 5-minute chart because candles and price swings are bigger, which likely means a greater stop loss distance. But because of fewer trades and a smaller position size, it is easier to have multiple positions. The main takeaway is that the 15-minute chart is for people who want to focus on the large price movements throughout the day. If you don't mind waiting longer for trades to open and close, if you prefer cleaner movement, and if you plan only one or two trades over multiple hours of trading, then the 15-minute time frame might work for you. Some traders only day trade on one time frame, while others trade multiple time frames to produce trading opportunities. A single time frame means you see a time on the 1-minute chart or whatever time frame you use and you take that trade. Multiple time frame trading means you look at a longer term chart and use it as a filter for trades on the lower time frame. In this case, a trader may check the 15-minute for the overall trend direction and look for opportunity to enter in that trend direction on the 1-minute chart, for example. Most day traders pick one time frame and they almost never leave it. They are so locked into their time frame that they forget about the bigger picture. The other extreme are traders that constantly jump from time frame to time frame without much of a plan. That's why the best solution is a top-down multiple time frame analysis where you start on the higher time frame, the 15-minute or 30-minute time frame. Look for the bigger picture perspective and then slowly build your trading plan by going lower. And don't start your analysis on the lowest time frame and then work your way up to the higher time frames. This creates a very narrow and one-dimensional view, and it misses the point of the multiple time frame analysis. Now, time frames are often discussed as if they are the only charting option. They are not. There are chart types based on things other than time, and one of them is the range bar chart. Range bar are bars that are plotted on a chart that have the same price increment, the same height, and Each bar closes either at the high or the low, regardless of the opening price. There is no time component as you would see with candlestick chart or bar charts. In TradingView, for example, if you want to range of 10 points on the rupees and you are trading with range bars, set your range to 100. Every time the pair moves 10 points up or down in total for that bar, it will complete the current bar and start a new one. So, time has no effect. Here are the key takeaways to keep in mind when day trading with range bars. All range bar are uniform in size because the range is constant. You can choose any bar size you want based on your need. You can select a 4 points, 39 points, or any size you want. The time period covered by each bar is irrelevant as range bars are time independent. For this reason, range bars can help you to identify ranging price action in a blink of an eye, and potential support and resistance levels are more clearly visible on the chart. Probably the biggest advantage, especially for day trading and scalping, is that lot of the false signal that come with the time based chart are eliminated. Time based chart will always post the same number of bars during each trading session regardless of volume, volatility, or any other factors. The only time you will see more range bars printed on the chart is when we have period of higher volatility, and even then it is dependent on the range bar size selected by the trader. Inversely, when we have low volatility, you will see fewer range bars printed on the chart, and this is a huge improvement over classic time frames. So, if you ever struggled with trade management strategy when day trading, try using range bars because range bars are an effective tool to time your entry and exit points. Another day trading and scalping alternative is the tick chart. The bar on a tick chart are created based on particular number of transactions. Again, time is irrelevant. For example, a 200 tick chart create a new bar after every 200 transactions. You can customize tick charts to the number of transactions you want. For example, 5 tick or 500 ticks. Remember, time does not play a role here, as tick charts are transaction based and new bar are formed only when there are enough trades. The market noise is reduced, and you know that higher the noise, the more difficult it becomes to make smart decisions, especially when day trading, when you need to act fast. The main advantage of a tick chart is that compress low activity trading periods. On a time based chart, you may see 20-30 useless candles, while the tick chart may offer you only 10-15 relevant ones. Tick charts can help you in placing better stop loss orders and take profit level on the chart. This is especially useful during period of high volatility and rapid price movements, and without the accumulation of small candles like the one of the time based charts. Tick chart make it easier for the trader to spot price swings. I will say it once again. There is no best time frame for or a combination of time frames. A winning strategy can be built on any time frame or any combination of time frames, but understanding the pros and cons of each time frame will hopefully help you decide which one works best for you. I am mainly a swing trader, but when I day trade, I tend to use a multiple time frame analysis using range bars. This works for me, but might not be your style. One time frame is not better than the other, but one may be more favorable to you because it provides more trading opportunity or has a clear look. And it is your job to backtest, analyze, and determine which one works best for you. As always, if you learned something new and found value, leave us a like to show your support, and don't forget to subscribe and hit the bell icon to get notified every time we release new videos. Until next time, thank you so much.